Just to kick things off, there's actually another Twitter Spaces going on right now that's entitled, "Is Tesla the next Theranos?" In my personal belief system, whatever I believe in strongly, I have to also be ready to tolerate listening to the other side. So for the macro market, like it seems to be the story every week for the last several weeks, right? Where we have this huge kind of dump of growth stock. Market is always right by definition in my mind, and we just have to adapt to it as best we can. I think it's human nature for the macro market, especially, to just kind of overcorrect itself.
I think there's going to be a wide disparity between the winners and losers. I still like the group of companies that we're invested in. I think they will be able to weather, a severe economic downturn better than most of the others.
Where does Tesla shake out in all of this?
I kind of view Tesla as one of these in-between companies. When you have interest rates rising, it increases your equity discount rate. So you need to use a higher discount rate to present value the cash flows of a company. That hurts growth stocks more so than like value stock. Tesla certainly is kind of a growth stock because they're growing at such a rapid clip, but at the same time, they're generating several $1 billion of operating cash flow per quarter, and they have kind of turned into this surprise juggernaut of cash flow. So they have this situation where their fundamentals can serve as a little bit of a backstop.
That's sort of what I keep in mind when I think about, could Tesla be paying one day pay a $200 billion a year dividend or $500 billion a year dividend? I think, yes, one day in the future it could pay that much in dividends, and so I still think it's still a steal at these levels historically when we look back in 10 years. All the other growth stocks could, worst case, get cut by 80% from here still in my mind. If they're not generating cash, I think Tesla is a little bit safer because of the gross margins improving and cash flow actually generating.
If you, opened a short position on Lemonade a year ago, then the stock's down 79% since then. So that's
how much more upside are you going to get? Yeah,
exactly. You're not going to risk a huge amount of upside from here to like squeeze out an extra 10-15%. Call it a day. That's a home run for a short.
Yeah.
So there has to be some level of short covering, in the medium term for Lemonade in particular, I think. So it wouldn't surprise me if Lemonade has a relatively sharp movement in the short term. We're going to be doing a deep dive on Lemonade with one of our interviews coming up. So in the next week or so, you'll see us go into this in more detail.
RBLX, we're excited to see what their fourth quarter financials are going to be, with the bookings in December. I just feel like there's a lot of bookings in December that maybe the market's not ready to, hasn't been ready to digest yet. And maybe it could be a nice pop for RBLX. I think they're closer to level 4 than, Elon's at the forefront. He makes these decisions. Elon makes the decisions, and he's at the forefront of the latest technology. But I think this year, I believe in Elon in this latest timeline he put on Lex Friedman's interview.
EV to EBITDA is capital structure neutral. You have enterprise value, which includes debt, and you have EBITDA, which excludes interest expense. So that is kind of like a capital structure neutral way of comparing companies, whereas like a price to earnings ratio, PE, that's only on the equity side.
Yeah, I don't think Tesla's gonna, the insurance is that much of a boon. I think it'll be nice icing on the cake. If you think SpaceX is a bargain at $100 billion valuation, then I think Rocket Lab is a real bargain at $4.9 billion valuation. I think that's how I would answer it.
I think 1 year from now, it will be a highly valuable thing that drastically improves the overall driving experience.
I think Wall Street analysis, Tesla knowledge may never catch up unless you have a Wall Street analyst that's like really smart and solely dedicated to Tesla only. Most analysts have to cover a group of stocks or an industry. For that reason, they can't spend all their time just on Tesla. Hopefully today's testimony by Fed Chairman Powell is kind of stabilizing reducing the uncertainty of how quickly or how far they'll change rates in a given time period for the next, 12 months, for example. I don't know for sure. Macro markets are very hard to predict.